So I look at the recent strength in Apple heading into year end, and I attribute it really primarily to the iPhone, which remains their core product from a sales and profitability standpoint. If you think about their 5G launch, they've had a lot of things working in their favor. The carriers are behind it for the first time in a long time because they want to justify the billions of dollars they're spending in upgrading their network. And then consumers have more discretionary income. As you see in the TSA throughput, they're traveling less. And in the open table seated diner numbers, they're dining out away from home less. So I think it's really the strength of the iPhone that's driving Apple into the year end.
And is that something that you would expect to continue? I mean, we're talking about several effects that would seem like it might have pulled forward a bit of demand.
That's a great question. Here's where I think it benefits from the continued build out on 5G. So to the extent they're getting the initial wave of consumers buying the product, but to the extent the next wave will come as you have a bigger 5G build out, this I still think looks to be a multi-year event and not so much a pull forward in demand.
Yeah, I mean, Mitch, one of the reasons we're focused on Intel with this third point, I guess, stake and call for changes is because, and there have been a variety of reasons, but one of them, of course, is because Apple basically dropped Intel for its Macs. How does this speak to some of the stuff we're seeing on the chip side that's playing out this year, whether it is Intel in the midst of the news of this week or some of its competitors like AMD and NVIDIA that have done so well and are now buying companies at multi-billion dollar deals?
Yeah, so to me, the story for Intel really hasn't changed. I read the letter that was sent out by Third Point, and it's really nothing new, honestly, when you look at it on the face value. So basically, he's talking about, trying to fix their manufacturing or outsourcing, which I think the street already knows Intel kind of has to do because you can't have a 2 to 3 year be 2 to 3 years behind TSMC and try to catch up. So AMD, I think, is going to continue to gain share against Intel. Intel has got a long-term problem, so unless he's got an idea to either kind of change the number of engineers they've got working there, or two, come up with some sort of new products to sell, it doesn't really make a lot of sense to me in terms of what was in the letter. It's kind of what we already know, which is that they're behind the manufacturing. They're 2 nodes behind TSMC. And guys like Apple and supposedly Microsoft, according to some articles, are also trying to create ARM-based chips. So I think that that's going to be the future effectively. And you're going to see Intel continue to lose share both on the ARM side and to AMD and the x86 side.
Mitch, I think there is a view that, well, listen, at a reduced multiple, there is some upside here if you could just, get a few multiple points in the stock. You don't seem to be a believer, though, that they can actually do that?
Yeah, so that's been a very dangerous thesis in technology for many years now, the value trap or value investing. Value investing was very popular for a long period of time, but now at these levels, the question is, whose EPS estimate are you using? Up until the middle of this year or so, I think it was a pretty consensus buy in Intel, at least a neutral to buy, and then everybody downgraded in the middle of the year after they announced the delay. So I would argue that probably the E is a lot lower than people think. So the PE multiple is actually fair right now because the real number is going to be lower than what the street's modeling.
Tom, I want to go back to Apple for a minute because you talked about the iPhones and the fact that that is still basically the company's bread and butter. I thought this was a services story now. I thought that was the whole point to the valuations that we've seen in this company in the last 2 years.
So that's an excellent point, and the services revenue has been both accretive to top line and the bottom line and to the multiple. But in my opinion, it was a services year up until the launch of the next generation iPhone devices with 5G. Now it's a services and iPhone year, and that's a great year for Apple.
And Mitch, just finally more broadly on semiconductors, I mean, granted, it's been very difficult to take a value approach in tech, capital-intensive tech like semiconductors. But right now you have Intel, about $200 billion market value. NVIDIA is at $320. Does that make sense to you? In other words, just buying the top-line growth of NVIDIA, are those trends going to remain in place?
Yeah, I don't see anything that's going to derail the trends. I actually think that if they are able to close the ARM deal, I wouldn't be surprised if NVIDIA becomes the first trillion-dollar chip company. We've said this many times in the past. So right now, again, the issue with value tech is value tech usually means the company is losing market share, and on top of that, the technology is going away. So unless you solve those two problems, I don't know why the multiple argument makes a lot of sense. So right now, I think the big argument, if I were to put a big picture around it, is are interest rates going to be 5% or negative 5%? So the answer doesn't really matter there. What you need to do in that case, if you think it's negative 5 or 5, you need to find companies that grow faster than 5%. And so NVIDIA, AMD are clear examples of that would kind of fit into a book that can outperform in both a negative or positive interest rate environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.